Up next, then we're going to look at the Nordic region, and I'm delighted to invite Ellen from the Norwegian Venture Capital and Private Equity Association to take the stage with her panelists.
You can have mine, Christian. Okay, thank you. It's great to be here. In this panel, you will get to know more about the Nordic private equity market. And with me on stage, I have Christian Bamberger-Bro from Accel, Amanda Tonsgaard from Triton, Torben Kjødberg from Capital 4, and Tim He from Summa Equity. So welcome on stage to the four of you. And let's begin with placing the four of you on the map of Nordic private equity players. So can you just give us a brief introduction of your company, the size, where you're located, your investment focus, just so we can have you placed. Christian, will you start off?
Yes, I can start. So Christian, I'm a partner at Accel. Accel is a mid-cap private equity fund covering the Nordics. Just finished investing our sixth fund, 800 million euros. Our typical bite size is 75 to 300 million euros of enterprise value. And we invest across four sectors: technology, which is the biggest, and then business services, industrials, and healthcare and consumer.
Hi, my name is Amanda Tonsgaard, and I am part of the investor relations team at Triton. We're a Northern European-focused mid-market manager. We have offices in each of the Nordic countries. We've been around for 25 years, raised around 16 billion, and we have three different strategies. So in terms of EV, we do everything from 70 million to 2 billion, so it's quite a span. We also have a credit strategy. I happen to be Danish, one of the happiest people in the planet, according to The Economist.
Yes, hello, my name is Torben Kjødberg. I'm one of the founding partners of Capital 4. And Capital 4, I cannot introduce that as one of the PEs here today, but I'm one of the investors out of a leveraged finance fund. So most of us are based in Copenhagen. We're 115 people, around 100 of us in Copenhagen, and then a few people in Stockholm and Frankfurt, and about 10 people in New York. We do everything from bigger transactions on the high yield side, on leveraged loan side, but we are here more to present our private debt strategy that is Nordic focused or Nordic European focused, where we manage about 2.5 billion.
Great. And to round off the panel, so my name is Tim He. I'm a partner at Summa Equity. So Summa Equity is a Nordics originated impact fund. We've been around for about 6 years. We manage 4 billion euros. We raised our third flagship here earlier this year of 2.3 billion. Our focus is Northern Europe and North America as well. Most of us sit in either Stockholm or Oslo, but we have offices in Munich and California, Palo Alto, since a few months back as well. We have two strategies. We have a mid-market buyout strategy, which is ESG focused. And then we have a growth equity strategy as well with the new fund.
Thank you. And now to get to know the Nordic market a bit better, can you tell us what's characterizing the Nordic economy, Christian?
Yes, so I prepared a few stats here, which was actually an interesting thing to do. The Nordics is a quite interesting and attractive economic region. If you compare to the EU, it's a pretty affluent, so $65,000 of GDP per capita versus 49 in average Europe. You have a high level of trust in society. So the numbers, for example, trust in government, 65 to 80% of Nordics people would actually answer that they trust their government. That compares to 45% in the OECD. Highly educated, 45% have tertiary education versus 33 as an average in EU. There's a lot of workforce flexibility. The job-to-job rotation or transition during a year is around 4% in the Nordics. This compares to 2.7 in the EU, so flexible workforce. very high level of digitalization. Europe has an index called Digital Economy and Society Index. The 3 EU members in the Nordics, they rank 1, 2, and 4. So very high level of digitalization. I think the last thing I want to mention is on the ESG side, very much at the forefront, actually not just in Europe, but globally. If you look at one stat, so the amount of companies on a relative basis that has committed to science-based targets is actually 4.5 times the average in the OECD. Torben, maybe you want to...
Torben, maybe you can fill in on the financial systems.
Yeah, you can say the financial systems in the Nordics are somewhat different from what you see in Europe. And when we experience working with private equity funds on our private debt offering, which is focused on sponsor-owned businesses compared to non-sponsor-owned, there the sponsors, of course, have the opportunity, and all of you will also nod to that you have different options to how do you finance your companies, and sometimes you go with the bank model, and sometimes you go with the sponsor model, so a private debt provider as us. And over the years, we have seen the private debt model growing quite significantly in the Nordics, and that's actually because the Nordic has been having quite a lot of very strong banks that has very low NPL ratios, but there's also a reason why they have so low NPL ratios. That's because they typically don't go that high in leverage, or they are more strong on the covenant side. So often when transactions happen in the area, there will be a choice between, you can go with a cheaper solution from the banks, which is, you'll probably say it's very attractive now and then, because you can, if you fit your model into that with the business you are going with, then you can get quite attractive financing that way. But they fit very much into a box, quite often amortizing, maybe not that long loans and so on. Or you have the opportunity to go with a finance solution from us or some of our competitors, where you pay quite a lot more, but get the flexibility side on it. And there's not that much in between. So for a standard transaction where maybe you put around 45% LTV on the transaction from the debt provider, then we will charge roughly 600 basis points. Whereas if they go with a bank, maybe a little bit lower level, they can, and you can probably give some numbers there, but maybe we are more in the 300 area. So there's a different setup there. Yeah.
Thank you. Yeah, Tim.
Yeah, I mean, if I can just add to Jacob mentioned some stats around the Nordics before. Just 2 stats, I think, which is actually quite unique to the Nordics. One is it's one of the most digitalized regions in the world. And from that perspective, what we've seen is there's been more tech unicorns per capita coming out of Scandinavia than anywhere else in the world, except for California. Just think about that. That's a lot. And that actually drives a lot of the value, but also the experimentation that happens in the Nordics. That's on the technology side. Then we, of course, have the ESG and sustainability side. That's what we care about a lot. But we also see that a lot of the new things coming out in this sector, a lot of it is tech-enabled, is coming out of the Nordics. If you take EV penetration, highest in the world in Norway. The energy infrastructure, most advanced, because they had to host all the EVs. So we're seeing a lot of these new trends actually come from the Nordics, which I think is an interesting backdrop.
Yeah, absolutely. And before we talk more about that, I was also thinking we tend to talk of the Nordics as one market, but there are several differences as well. And even though we have a lot of Danish panelists here today, you probably know the other Norway and Nordic markets as well. So Amanda, will you elaborate a bit on the differences?
Yeah, sure. So, I mean, obviously, well, not obviously, but for us to sit up here, we're all aware that Sweden is by far the largest, jurisdiction of them all. We Danes don't really like that, but we have to admit it. Obviously, Norway is very strong on the energy side of things. And if you look at Finland, same there. They also have a lot of forestry. So at the end of the day, it is 4 distinct markets, which is also why we have offices in each of those countries. And when we did this prep call, one of the things we were talking about is when you have big turmoil, it seems to sort of even out by the time you get to the Nordic market, and there seems to be sort of an inherent diversification in having these 4 markets. If I were to move to sort of more investment strategy and looking forward, I think what's interesting is a lot of the companies that are in the Nordics, you have to go global, and that's also what Tim was kind of referring to, because the local markets are just not big enough if you want to go for growth. So there are these differences. You want to?
Yeah, just that comment. So if you look at it on a day-to-day basis doing private equity deals in the Nordics, there's the simple difference that we have 4 different languages. It is still an advantage when you sit out there with a founder or a family and you want to buy their business that you speak the local language, and those are 4 different ones. I think there's another difference that we see also, which is the target universe per country is quite different because there is a different sector mix in the different countries. Norway quite affected, you can say, in a positive or negative way, depending on how you look at it, by offshore energy feels a lot in the whole sector mix up there. You will have Sweden where there's a tilt towards more manufacturing. Denmark would be more on the service side, more healthcare, generally speaking. I think common for all of them is that technology, as Tim was referring to, is a big sector in all 4 Nordic countries. So that's a couple of differences we see, you can say, in our daily jobs.
Yeah. Thank you. And you can continue on that track, Amanda, telling more about the investment strategies. What's affecting the strategies in Nordics today?
Obviously, I cannot say what affects other GPs, but I can just give some sharing of what happens at Triton. And I think at the end of the day, our strategy does not change. That being said, it is, of course, continuous development. You learn, you improve, you enhance, and you have to add to the toolbox. ESG, we added in 2013. Tech has always been a big part, but for us, it's not a sector. It goes across all the sectors. So we focus on industrial tech, services, healthcare, and consumer. I looked at some reports ahead of this, and I wasn't surprised. I kind of knew this. Industrial has not been very fashionable for a very long time. It's all been about tech. Now, that did not mean that we went into tech, because we very much believe, and I think that goes for a lot of GPs, you stick to what you know and what you understand very well. So yes, you enhance on the toolbox, but the core remains the same. What we're seeing, though, now is the dialogue we have around industrial tech and also the business services is even more interesting right now because, 1, there's not a lot of fishing in that pond, and 2, I think a lot of namely, you mentioned manufacturing is a big thing. We think a lot of the corporates might want to offload some non-performing assets, some non-core. Right now, the businesses are still doing well, but if you look ahead, we're not sure that's going to continue. And if you look at sort of how the Feds have been increasing the rates lately, don't fight the Feds, right? It's either the pest or the cholera. Either you're going to have recession or you're going to have very high inflation. And right now, I think they're trying to beat the inflation.
Thank you. Anyone who wants to add something to the Nordic market trends or the investment, what's affecting the investment strategies, Torben? Or it seemed like you had... Give me a sign.
I think I will save that for some of the common questions. Yeah,
a team then maybe.
Yeah. I mean, obviously we're seeing a huge wave of sustainability targeted investments, right? And I think we're seeing that all across the world, but in the Nordics in particular, there's just a lot of attention to it. If we start from outside of the investment landscape for a second, there's a huge wave of consumer demand, right? Consumers are demanding transparency. They're demanding, companies like H&M, IKEA, et cetera, to actually go transparent on their supply chains. So we're seeing the consumers as the first wave. Corporates haven't really leaned in yet, but this is sort of the first wave. And we've seen it in other industries and other types of demands consumers start. So that's sort of outside. The way that affects the trends on the investment side is companies are targeting these gaps. So we're seeing a lot of companies, not just in the tech space, but also in the industrial and the recycling space, that are really going after closing some of these gaps. So the opportunities are certainly out there. The problem in 2021 was pricing gaps. I think that's changing to the point made earlier.
Christian, do you?
Yeah, just adding on the ESG, I think we see it coming, very, very strongly now. Consumers, yes, but we see it a lot from customers as well. B2B businesses where customers are demanding, that you can present your ESG strategy, that you can actually present real improvements. So if you participate in a tender, for example, with a public business in Norway, you have to be able to explain to them what exactly are you doing on ESG. So it's becoming real. I think the last 2 years is really becoming real because customers are demanding it and you cannot avoid it. 3-4 years ago, it was us investors pushing our portfolio companies to do more stuff on ESG, and that was less of a good case, you can say. But now your customers are demanding, then all of a sudden it becomes real. And I would say the other side where we see it a lot is on employees. A young employee today, they will sit in a job interview and ask about a company's ESG strategy. So that's a fact already, and it's been a fact for a couple of years. So again, that is pushing the agenda, and I totally agree that the Nordics is very, very much at the forefront. It really is globally. Whatever number you look at, it's at the forefront. We have to follow. We have a portfolio of 19 companies today. A third of them we've just done the scope 3 emissions. We're going to push through the rest of the portfolio. Most likely during next year will be done. We're setting on the back of that science-based targets, and I think it's going to actually be much faster than we all are committing to, which is a good thing.
I can briefly add on that. So when companies set targets, we see that they are more and more willing to put incentives into the loan documentation. So for example, last year in the European leverage finance market, which is one of the bigger leverage finance market. Of course, the high yield market is even for bigger transactions, but in the mid-size, there roughly 30% of all transactions had KPI linked in the loan documentation. What we see in the Nordics, and especially when working with private equity sponsors, is that they have a very high focus on this, and they are very willing to put KPIs into their loan documentation. And thereby, it's not only something they try to push on the company, they are also willing to push it quite high up on the management agenda, because suddenly it will cost money if you don't fulfill the targets, but you also have a benefit if you fulfill the targets. And these economic effects can be quite sizable. It could be like 5 basis points per target you fulfill one way or the other. So if you have 3 targets in there, it could actually be 30 basis points per year, and then you move for a tougher target year by year by year. And this year, the 11 transactions we have done in the space on the in the Nordic private debt market, all of them has had these targets in the loan documentation. So I can just agree on that. It is being implemented, and it's also coming into the loan documentation.
Okay, time is running fast. We have to move forward, talking about the activity level in the Nordics as well. And Torben, you can continue. Have we recovered after COVID? How is the activity level in the Nordics now?
Certainly, we have recovered after COVID, but now COVID also is a little bit time in the past, and now we're looking into something else. But if you look at the Nordics from a recovery economic perspective, and Christian gave some numbers there, but if you look at the GDP in the Nordics, it fell actually half of what it did in Europe, and it has recovered to more than where it was before the COVID, actually with an annual growth rate of about 2% versus prior COVID, where Europe is just coming up to the level they are. So that has recovered. Number of transactions has recovered significantly. If we see data for the first half this year, we're actually higher than we were the year before, and much higher than before COVID. But we are in a different situation now. We have the situation in Russia, and of course that's affecting the market. We have the rising rates and slower down economic development. So we definitely see a slowdown in activity. If I reference to the big liquid market, we have 80% down in new high yield transaction, 60% down in new leverage loan transaction. But on the private market here, it's down, but not as much as that at all. But so we expect it to be down transaction-wide, but there could be some transactions, as Amanda also talked about, and we do still look at a lot of things, but we are not at par at where we were last year.
Just one comment while we're talking about what's different about the Nordics. I think one aspect is the ability to IPO. So in the Nordics, it's been an incredibly active market. And I wouldn't say you can IPO anything, but you could IPO companies that were relatively small. So when you were buying companies, that was clearly factored in as an exit. And right now, as things are, that's just not possible anymore. So I think that gives ground to a bit more caution. And if you relate that to the investment strategy, I can just see on our side, we do a lot more buy and build because you know your platform investment, you know how they're doing, and you might actually be able to buy a smaller company at a low multiple. And then I think the third aspect, if I link sort of this to the investment strategies, if you look at holdings held by PE funds of listed companies, there are a lot of companies that have PE ownership. Not only that, but you've also, like in your other market, you've seen a big downgrade in terms of the valuations. So my guess is you will see an increasing number of P2Ps going forward.
Do you agree? That was that was from the Danish perspective and the UK. Do you agree from?
I think this is really a Nordic perspective because the Danish market has not been the most active. That's by far been Sweden and Norway.
Okay. Yeah. Okay. Yeah.
Yeah. No, I mean, I completely agree. I think the pace has actually been quite good. Certainly, we're focusing a lot on buy and build right now because that's where we see value, not just new platforms, but adding to existing. One interesting thing in this market is, for the deals that are being done, if you will, and that might be circular, it's actually a little bit easier to get to a deal now. Right? People are sort of being pushed, and it's easier to meet in the middle. That wasn't possible last year. You sort of have to pay up. This year, things are a little bit more flexible, and if there's and we foresee that to actually go on in 2023 as well. That if there's a willing or if there's an intention to do something, it's a lot easier.
You can also see on what people are very focused on at the moment is, of course, how is the economy going to be hit by the potential gas situation we have? And depend a lot on how the winter is going to be, but next year we might have the same situation again. And if you look at some of the research that has been out there, also from IMF, you will also see on those statistics that the Nordics are doing quite well with that respect. So that might also mean that if people want to do deals and they have that as part of their agenda, then they could feel a little bit more safe in that regard.
Christian?
Yeah, I just had one comment. I think in a panel it's always fun if people disagree a little bit. So I'll allow myself to disagree a little bit with Tim's comment. I think what we see in terms of getting deals done, the complete classic situation is playing out now, that we have sellers that were, are looking back, looking at prices back in time. And you have buyers that are at a lower place, and it is the classic situation that I expect the next 6, 9, 12 months. Ends will be more difficult to make. It will be more difficult to make ends meet. I think we're seeing exactly that. We can see a lot of transaction being pulled in the market. There will still be very healthy activity, but it might be 1/3 or 40% down from the top. But let's remind ourselves, the top we've seen in the second half of 21 and first half of 22 has been all-time high. So 30% down will still be a very healthy activity.
Should have had 30 more minutes to start that.
I actually agree with Christian, I have to say. I'm more, closer to his side.
Okay. Let's spend the last 5 minutes looking forward. Tim, do you want to say something about the expectations for the Nordic markets going forward?
Yeah. I mean, I'm sure the panel colleagues here can comment more on the short term. I think medium term, the opportunities are going to be very interesting. I think after the gas crisis, I mean, if you think back to the 70s where we had the other the last energy crisis, the number of innovations that we saw, especially from the Nordics, around energy efficiency, building materials and the likes, they all originated from the 70s. That's why the Nordics are so great at, pump technology, building materials, rock wool, et cetera, Vestas. I think we'll see another generation of that following this crisis. So we are very excited about that. And that's just in the energy transition space. You can take that to the wider sort of, whether it's recycling, but other areas that will be affected by the gas crisis.
I guess all of you have thoughts about this thing. Torben, do you want to add something?
Yeah, I think in general we are also very positive on the private market model. We think there is good value creation on that. So regardless of whether we go down in volume for a period of time, and I'm a little bit more on that side there too. So, but there will be quite a lot of transaction coming again, and whether we need to wait half a year or a year, nobody knows about that. But we need to be understandable that prices has come down, but transaction will start happening again at new levels. And there is actually quite a lot of buyouts coming from family-owned businesses that go to private equity-owned, and that has accelerated over the last years, and we definitely think that's going to happen. Then for us as a debt provider, we think there's even more, because there will be a tilt even further from the banking model to the private debt model. Whether that's going to balance out in 4 years' time, 5 or 10 years' time, we don't know, but we're still at a very, very low level in the Nordics compared to Europe. That's still in a low level versus the US.
From our perspective, we definitely think winter is coming. The question is, how long is it going to last, and how hard is landing going to be? But there's a lot of volatility, there's a lot of uncertainty, and right now I don't think it's priced in if we look at the valuations that we're seeing. From a sort of trading perspective, and as I said, we've been around for 25 years, we did some of our best and most investments in 2009 coming out of a crisis. So we are also quite excited about the opportunities, but you just need to be quite cautious.
And I guess one feature of the Nordic market which is interesting and which will help here is that there's a higher level of activity in the mid-market, both high-end and low-end of the mid-market, so more deals being done in that segment, relatively speaking, to the rest of Europe. And that segment tends to be more stable, both going up but also going down. So you can say that sort of underpins the activity level. And I guess another thing is that even if we think the Nordic is very advanced on the PE, in the PE space, which it is, we're still quite far behind some of the best markets in the world. So US and UK, the penetration of deal volumes versus, again, the size of the economy, GDP, or however you measure it, is still quite a bit lower than those two markets. It is high from a European perspective, but it's still a lot lower than those two. So there's a lot of room to grow, you can say.
Well, thank you. We have to end it. Unfortunately, our time is up. But thank you to the four of you joining the stage and the panel and sharing your insights, and for you listening in. So thank you.